Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. China is scooping up supplies of U.S. white wheat to feed livestock, pushing export forecasts for the grain usually used to make sponge cakes and noodles to a 27-year high. The purchases are the latest disruption in commodities markets caused by Chinese buying of grains and oilseeds during the coronavirus pandemic, pushing prices of major commodity crops to multi-year highs. China has booked more U.S. white wheat this year than any country besides the Philippines, the top buyer of the grain. While U.S. producers have long tried to woo the growing Chinese market for confectionery foods made from white wheat flour, the recent purchases reflect a need for animal feed, Chinese traders and analysts said.
Top oil exporter Saudi Arabia has cut the supply of April loading crude to at least 4 North Asian buyers by up to 15%, while meeting the normal monthly requirements of Indian refiners, refinery sources told Reuters on Friday. Saudi Arabia's reduction in supplies come as the Organization of the Petroleum Exporting Countries (OPEC) and its allies, a group known as OPEC+, decided earlier this month to extend most of its supply cuts into April. Saudi Arabia has pledged to continue with an extra 1 million barrel per day voluntary output cut for a third month in April.
Moving on to the top news in the energy sector.
Oil settled near $70 a barrel on Friday, supported by production cuts by major oil producers and optimism about a demand recovery in the second half of the year. Benchmark Brent settled down 41 cents, or 0.6%, to $69.22 a barrel. U.S. West Texas Intermediate crude also ended down 41 cents to $65.61 a barrel. Brent and U.S. crude ended the week roughly flat after prices touched a 13-month high on Monday, following 7 straight weeks of gains.
Sustained higher oil prices are expected to spur higher U.S. oil output this year, J.P. Morgan analysts said in a weekly note. At current prices, most U.S. onshore operators are economic, leaving a vast group of operators, from large public companies to private players, in good position to ramp up activity in 2H21 and build solid momentum for higher volumes in 2022, they said. The bank now forecasts U.S. crude oil production to average 11.78 million barrels per day, BPD, in December 2021, up 710,000 barrels of oil per day year-on-year.
Next, we have the top news in metal markets.
Demand and prices for battery material cobalt are soaring as electric vehicles stream out of showrooms in China and Europe, with little prospect of a significant reversal as drivers and governments move to cut carbon emissions. The price of the metal stands at $53,000 per ton, up 65% this year and around its highest since December 2018, having been as low as $25,000 in 2019 due to a global market surplus. Payables, a reference to the percentage of the cobalt metal price used to price hydroxide, a feedstock for electric vehicle (EV) batteries, are up at around 93 to 94% from about 63 to 69% a year ago, analysts from Benchmark Mineral Intelligence said.
Copper prices gained on Friday as investors were cheered by buoyant U.S. economic data and hoped that planned spending on infrastructure would boost metals demand. 3-month copper on the London Metal Exchange was up 0.8% to $9,126 a ton by 1800 GMT, erasing earlier losses. The contract has surged 47% since the beginning of 2020, hitting a 9-1/2-year high of $9,617 a ton in February. Data on Friday showed U.S. producer prices increased strongly in February, while consumer confidence in the economy rose to a 1-year high. We will now look at the top news in the agricultural sector. Prices for Ukrainian-origin barley from this year's harvest have exceeded those of high-quality milling wheat due to strong demand from China, analysts at APK Inform said on Friday. Forward contract prices for 2021 harvest barley stood at $220 to $230 a ton CPT, carriage paid to Black Sea June to July delivery, while high-quality milling wheat was priced at between $218 to $227 a ton with the same delivery date, the consultancy said. Such an atypical spread is largely due to the high purchasing activity of China in the barley segment, both old and new crops. The volumes of barley imports by China are simply off scale, it said in a statement.
That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.